I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Futures are getting downside follow-through, and there are major red arrows worldwide after Ben Bernanke discussed the possible end of the Fed stimulus next year. U.S. markets dropped more than 1%, and gold's downtrend intensified. Could today's trading set the market's tone for the summer? I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we are seeing downside follow-through from yesterday's market sell-off. Bernanke's comments yesterday about QE tapering were largely expected, though, Scott. So why do you think we saw such a harsh reaction to them?
Sometimes I guess reality hurts, or just an excuse to sell off. I really don't know, because I do think that people were expecting for him to do a little less QE. He's been talking tapering. He's been trying to talk down the market. There goes Brittany removing my coffee, which we need coffee in the morning.
I know.
There you go. So with that said, Big Ben came out and he actually made it a reality. And at that point, markets were kind of in a neutral area. We were at that intermediate downtrend spot where we're like, okay, if we hold above it, maybe we could be a little bit more constructive. We go back below it, we'll have some type of failure, time to take some risk off. And bottom line is, we closed at the dead lows of the day, giving a really nasty engulfing bar, which to me was almost more important than Big Ben statements, because it helps me with shorter term direction.
But we are still above the 50-day, so do you believe that we'll hold above it?
Well, we don't really talk that much in technical terms about a triple bottom, because triple bottoms typically don't hold. So, but we'll see. I come in today and I'm really not excited to be looking to buy anything, but I'm going to have an open mind. And if you look at the chart here of the SPX, you will see that this wedge type pattern is now looking that it could test the bottom end of it again. So here you go. This has been the trend that we've had for quite some time. Here's that May 22nd outside day. Here's the first time we saw the 50-day bounced off. This time also, where a lot of people weren't expecting it to bounce here either. And look at the size of that engulfing bar. Then, pre-Fed, we had these 2 nice days where a lot of nice stocks broke out, giving us some trades, which was nice before, and not having to sit through the Fed. And then yesterday, had this engulfing bar, closed back below this trend line. So right around here, I think around 3:30, I sent out a chart showing that this could be some trouble, and I got stopped out of my longs for those who didn't see it on the virtual trading floor. Now here we are opening lower. So the 50-day right now stands right around 16.18, which is where we're opening. So we'll see if we hold it again and bounce off. I think I'd be a little surprised, but if we don't get much of a bounce, perhaps we get that bigger corrective type activity to the 100-day, which comes in at 1576 at some point this summer. And
there's typically action in gold on Fed Day, and we are seeing the metals down this morning. Do you think it's a surprise that we're seeing the downtrend intensifying there?
Well, we've been pretty much in this lower range now for multiple weeks, and we've talked gold many times, and gold bugs have been bugging out all year. Why didn't it go up because of this? Why didn't it go up because of that? And technically, we say if something's supposed to go up and it doesn't, typically it goes down. Then you combine that with a lot of different price points, or action areas like we've been trying to point out over the course of the past 6 months. You make some choices and adjustments. You look at the chart here of gold, you will see that, look at that was a top way back when. Okay, from there, you had key resistance. And then right here, a lot of people didn't know, will gold go higher? Will it go lower? And I think right around here, I was a little bullish on gold. What happened? I got stopped out because this resolved to the downside. Okay, that was like right around 161. Then it came in, bounced, then you saw this macro support going across. So we're like, okay, you know what? If you don't think that you trade on an intermediate time frame because you've been holding your gold during this entire move, this is a spot to make adjustments. And pow, you know what? It wound up going down to 130.50, bounced off it, retested it, made a lower high. And then if you take a close look here, you will see that yesterday gold closed on the dead lows. So a lot of guys, I think, on the VTF probably took it home short. So coming in today with it down, 4% or so, that's nice follow through. I think it would have been more frustrating if it was up. But anyway, You take a look at this chart, you go sideways, you have a point of reference right here. This is like 127.80, which is a bit below. Then you have to go a little bit further back, to actually see where more macro levels are. And right here, this is about 123.50. So if you did go home short just as a trade, look to cover some. I already covered, a little bit more than half, and then see if it works its way down to here and see if there's opportunity. But overall, this shouldn't be a surprise because this has been in a downtrend all year.
Well, from there, let's go on and check some of the leading sectors. Let's check in on retail first. The retail ETF, the RTH, closed down 1.5%, broke below its 8-day. So if we reverse today, where would you say resistance is?
Well, we'll see where support is, and then we'll see what kind of bounce into resistance. So if you look here, this has been a strong sector, but look, short term, it created a double top with a bit of an outside day, right? It pushed above the prior day's high of 53.20, engulfed it. You have this small little trend line here. So I would say right now it's opening below. Here's your 50-day, right down the 50-day. If this holds the 50-day and goes sideways while the market pulls in further, it'll continue to show its relative strength, and that'll be something we turn to when the market stabilizes. But it's worth a look this morning. It is one of the strongest groups, but sometimes the strongest groups, if we do get more corrective activity, play catch-up. So I don't think you do anything too quickly right there.
So would that be the case then in the financials where we saw the XLF break below the 8 and 21 day yesterday?
It could be. This has a downtrend that's been there. Yesterday, the banks were weaker first, and then later in the day, they got a little stronger. I know I was trying to play JP Morgan. I've been in Bank of America, and I got stopped out of both. And then if you look here at the XLF, you will see that, you have this wedge type pattern here that it's opening below. So right away, here's your 50-day moving average, which it didn't even see the 50-day, if you remember, during the last correction. So here it is, write it down. 50-day comes in around 1924. So it'll be something to watch. And we'll watch some key stocks in that sector like Goldman Sachs, JP, Bank of America. And I still think the banks can have higher prices, at some point this year. But the question is, what about the next few weeks?
Now, what about consumer staples? The consumer staples ETF, the XLP, closed down almost 2% yesterday, broke the uptrend that had been in place.
Yes, there's been two different trends here. First one, if you look at the chart, you will see this was one exit when you had a trend all the way from before 2013, broke right there, came in, held support, and then you had an ascending channel here to retest that break. And then look at the engulfing nature of this bar that should have gotten you out of some if you were still there. Some probably even got short. Here's your 50-day in the XLP. Comes in right around 39. Actually, no, what is that? 40, somewhere around 40-ish. So I would just make sure that you watch the 50-day across the board. And if for some reason we hold the 50-day again in the S&P, you want to go after groups that held above their 50-day. And vice versa. Right.
Well, how about in the transports? We've talked a lot about the head and shoulder pattern developing there. And after the transports lost 1 and about 0.2% yesterday, where would you say we're at in that pattern?
You know what? This one actually, from off the charts, I didn't see that they listed it that way, but it makes kind of sense. The transports, as far as that head and shoulders pattern, if you go to the chart, I see more of like a wedge type triangle, but I could say there's definitely some type of reason to call this a head and shoulders pattern where you have the left shoulder, the head, and this would have been the right shoulder developing, and then this trend line could also be, the neckline. So, a lot of necklines haven't been broken throughout the course of, this move. So I would say, this is going to be very important. This area right here, coming into 110, to see if this corrective activity gets contained, or we get a move down to lower prices. So at this point, we have a lot of crucial areas that we might be revisiting again, and this time we need to see, how the market handles it.
All right, well, coming up, we're going to go in the trenches with Scott's thesis on going long the TBT and short the TLT. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
Well, we saw rates continue to rise after the Fed yesterday, triggering a sell-off in the TLT, which, Scott, has been part of your thesis for a while, going short the TLT. So at this point, what would you suggest?
I'd say if you've been short it for a while, you've been enjoying a nice move, and on this down open, you trim and trail some, or you cover some and stay with some. A lot of people have been trying to get ready for rising rates, and some people have done it for the past few years a little early, so they might have got away from it. We talked about in the 2013 thesis that we wrote in December that this could be the year that if you're going to have multiple positions, that this is something you put in the drawer. I'm not short the TLT or long the TBT, but I don't have to be. Sometimes I'm the offensive coordinator that tries to tell people how to manage their situations. But anyway, you look at the chart of the TLT, and this is what we've been talking about, and it's been this head and shoulders pattern with the left shoulder, the head, the right shoulder. You've had quite a move to the downside. It broke below this neckline. Broke below a few things. It's below all the moving averages. So now we're coming into like 110, which could be some support. If you look across here, you do see some points of reference. So, shorter term, if you're in, like if you added yesterday because it closed on the lows, maybe you take some off. But ultimately, I think we get to at least 105, maybe even down to 100 at some point. So again, I would say if you're short this and, you're doing it also to hedge multiple longs, on a macro level, stay short, but, use a tier system around it.
And what would you suggest when it comes to going long the TBT, which did soar 2% yesterday?
Yep. Well, we've been talking about that jobs report, that strong one, that ignited the thesis again after the initial move earlier in the year. And we've been talking about, 69 to 70. Once it breaks and closes above that, it could be a nice move to 80. Well, this morning I think it's around 73. If you look at the chart here, the TBT, you will see it's now above this major trend line. It closed above 70, it's above 70, 70 and a quarter. It's getting some follow through. We talked about at least 80 being a target. So with that said, if it's in your drawer, let it stay in the drawer. If you, just say wanted to look at short-term patterns here, and this was that gap up here that ignited this move, or you got in here when it had a mid-level commitment where it went, and just say you even added yesterday or something because it closed on the dead highs. Right around here, you trim some and then stay with some. Or if you're just like letting it go and you bought it in January, just stay the course and keep it in the drawer, because I do think 6 months to 12 months to, obviously it looks like today raising, rates are going up. The matter of, there's going to be different times when they spike or they consolidate.
All right, well, let's do some quick hits here and talk Apple, which has been weak, sold off with the market yesterday. It's moving back to that 419 key support level.
Yes, we had the tale of two patterns, the inverse head and shoulders pattern and then the ascending channel. And going to the developers conference, the ascending channel won. So if you look here at the chart, I'll show you. So here it was where you had the left shoulder, the head, the right shoulder. Okay, this also was the channel that it was following. And then if you look a little closely, it broke below. Remember when I talked about 444 as a stop? Well, that was my area where I said, okay, now this is turning into a B or a C play, because it doesn't seem like it's going to break this downtrend. Then, it held the 50-day. This was the developers conference where it sold off. And then yesterday, I think some actually looked at this short. Okay, went below 428.50, which was another key area. So here you are at 419-ish. That's probably where it's opening. If you did go home short on the close in your tactical, maybe you cover some. If you are looking to see if it could hold here, try it. But if it does close below this 419, next real level doesn't come all the way to down here, and the stock has been acting weak. It's showed very little commitment all the way from 700 all the way down, and even in that nice rally that we had, it just, it didn't go up. So stocks that don't go up when the market rallies shows relative weakness, it goes down. And then yesterday, sometimes Apple's been acting like a reverse ETF. When the market goes down, it shows relative strength. Well, it went down with the market also yesterday. So right. That was, that gave you some clues that you could actually be shorted also.
Right. Well, more impressively, Google actually managed to close in the green yesterday. It's been a standout in tech, and based on its behavior yesterday, if we get a reversal today, would you say this is one of the first ones we should turn to?
Yes. This one has been one of the chosen ones, but, we talk about times to buy it. We talked at the descending channels. Just go right to the chart. Right here we talked, boom, that was your spot, or at this reversal, gave you a nice move. This was another spot. Here was your momentum. And then yesterday, it was up, closed with the markets on the lows, almost a small topping tail, so sign to get out of some. So if you did, you could retest, perhaps looking at it at 889 or maybe even down to the 21-day that's been holding. So for me, if we are going to show any kind of strength today, I think Google's something you watch somewhere between this 886 and 889 for tactical long. If it doesn't hold there, I would just give it more time, because that means that even the best of the best can rally.
Right. Well, and if we do show some strength today, would you turn to a stock like LinkedIn, which also managed to close in positive territory yesterday?
Yeah, I think that this one also could show some strength as it's been building this huge upper base. You look at the channel, I know Sperling's been trading it a little bit more recently than me. There's been some, tactical plays along the way. When it broke this little, flag pattern, it gave you a move to the downside, and then it held the 100-day. From there, it's been acting better. So I would say, look at this 176-ish area. If it could hold this and go sideways, this will be something that we turn to the next time the market finds its footing. It did close green yesterday, so maybe they try and take a positive, so it's definitely something to watch.
Now, what would be your strategy with Netflix, which actually managed to finish the day up 1.5% yesterday?
I think it's the same. Sometimes Netflix likes to be in its own world, doesn't care what the market's doing because of the heavy short interest or some of the big players are in it. This one, you had that big gap up, right? And now it's still above it. So I would say see if it holds. Yesterday's low is 227-ish. So maybe that's a spot. And then, if you missed it from here to there, maybe, protects the gap, you buy some there. This stock has been, a very big performer. This little red dog reversal, remember that one right at the 50-day? Surprised many that use that tactic into there. And if you're a macro investor in Netflix, it still looks really good. If you're a trader, maybe there'll be some opportunity with this down open.
And Tesla held up well also during the sell-off in the market yesterday, sort of shaking off the news about that recall, which you actually didn't think was going to be that big of a deal anyway. So what do you think about Tesla today if we get some sort of bounce?
Well, yesterday was definitely helpful, I guess. I know I was long Tesla coming into the day, and I saw it down, and I'm like, that's not that big of a recall. Maybe there's opportunity. So it did go from negative to positive, and then when it was up like 1.5%, I said just to the community, I'm like, listen, if you were long Tesla overnight, and you saw the news and you were, nervous and you were sweating and you had heavy anxiety, that means you have probably too much of this thing. You should probably sell it now that you got lucky that, you didn't sell it down 3 and now it's up 2. But overall, you look at the chart looks really strong still. Okay, you look here, it's been holding this uptrend. It's been following now the 8-day above the 21-day. It was green yesterday when the market came in. So see if that continues. Perhaps it goes from negative to positive. If it doesn't, it might need some time considering the type of move that this had. And, most stocks go with the tide. And if the tide is going to be to the downside, then this one's going to have a little trouble going higher. But if we do hold the 50-day, those 3 or 4 tech names that I just went over, besides Apple, because that's been weaker, those are ones to go to.
All right, so those could be definite names to watch today. What will be your focus as you head into the trading session?
I'm going to see, I guess, if we could bounce off the lows. I think the world markets are off enough where I feel, my gut's telling me that we probably don't hold the 50-day. It could be, quad witching tomorrow. Maybe there's tactical action to have today, but for some reason I'm just like not excited to be coming in flat to buy the market. I'm actually coming in short the GLD where I covered half, and I'll see if I want to hold that. So, but if you want to look at the market right now, do it without an opinion, which is what I'm going to try and do today, because I want to just get short off the brain. If we rally off that hard and banks go positive and some of those stocks, go positive, then right. You know what? Maybe the tapering was priced in, and yesterday was more emotional, and you get a great opportunity. But if in the first hour, some of these key stocks don't go green, and you see more downside pressure, if you are tactical, stay tactical, and maybe put on like a put spread if you think that we're going to close below the 50-day, which then could lead to the 100-day. So I'm going to take it as it comes right now. I'm going to go pretty slow, and I'm going to let the market, tell me if any of the plans get confirmed to take action on as the morning progresses.
And happy trading. Have a great Thursday.